of FinTech Impact. I'm your host, Jason Pereira. As always, just a reminder to sign up for the newsletter at jasonpereira.ca. On today's show. Today on the show, we have Shuli Mantsur, Director of Partnerships for Become. Become is a lending aggregation company that provides a single-stop source for business owners to go to one website and potentially apply for multiple lines of business and with multiple lenders. And with that, here's my interview with Shuli. Hello, Shuli.
Hey, how's it going, Jason?
Great. Thanks for taking the time.
Absolutely. It's my pleasure.
So Shuli Mantsur, Director of Partnerships at Become. Tell us about Become.
Well, there's a lot to say about Become. We started out in Australia in 2016. When we first went into the business lending market, we worked with one company, Capify, and very soon we understood the pain of all the customers that were coming through our platform, where they're basically, trying to get business funding for their companies, and going through the bank is not always a viable option. It's not always a quick option. And more often than not, you'll get declined. And then when you go through alternative funding, there's so many funders out there, knowing who you would be able to get funding from is very difficult. You would have to fill in so many applications. And of course, your credit score takes a big punch. So basically, we came up with a way for the customers to come into our platform and just sort of make it a one-stop shop where they can fill in just one application, ours, that's very all-encompassing. And we can let the customer know, okay, well, according to the information that we have on you and these data points, we're able to tell you that you're most likely to match with these lenders. Would you like us to pass your application onwards? The deal that we made with the lenders is if you have our application, that's good enough. Okay, you don't need your application filled in as well. Use ours. Okay, everything you ask in yours, we ask in ours. And within, I think, 6 or 7 months, we partnered up with all the biggest lenders in Australia and pretty much took over the market in terms of a marketplace. So digitally, we're doing very well in Australia.
So essentially, you are, for lack of a better term, kind of an Expedia for alternative lending.
Precisely. Even more so in the United States than we are in Australia. Here, well, we launched in the United States, I think towards the end of 2017. We made our big launch here. And basically, that was a bit slower on the uptake, but where we are today is exactly what you're describing, that Expedia for business loans. The data points that we collect are more encompassing. They go deeper into the customer's credit history, bank data. We created a way to connect with all the Secretary of States across the nation in order to pull data from there as well. So when a customer comes into Become's platform, it's pretty much underwriting before underwriting.
Excellent. So essentially, so there's a couple things to unpack there. So let's go back to the entire Expedia for lending. So for those who don't realize, most of the more popular travel sites these days, what they do is they basically aggregate pricing from all around the entire industry. In addition to that, they'll often aggregate from other sites also offering those tickets. So basically they're rolling it all up into one experience. So you don't have to go shopping around multiple places. So this, to my knowledge, I've never seen this done with lending before to the scale that you guys have done it. I've seen, various loans of various companies listed, but you guys seem to have gone across several lines of business. Can you speak to that? I mean, I'm counting like almost a dozen on your website here.
So yeah, we're partnered up with, I think, about 20 different lenders and 2 micro lenders. And basically the main difference between these two is one will work with young businesses and startups and the others most likely won't. And basically, once the customer comes into our platform, connects their bank account, notification and everything, we're kind of listing his options from top to bottom with, the loans that we know are most attractive to least attractive. From the get-go, we're not going, if he has like 3 or 4 very good options, we're not even going to send his application off to lenders who are going to give him less good options.
Yeah. So, but I mean, you're looking at not just that, you're looking at various types of loans. I mean, I see here you got everything from asset-backed loans to commercial vehicle loans to startup loans to lines of credit. So you guys really have kind of run the table on the different types of credit facilities that are available. So
exactly.
Yeah. And, this has come up more than once on this show, but as a small business owner trying to get lending from a major bank, there are a few experiences more painful in finance than that. And as you said, more often the answer is no. And it's nuts because, I mean, I'm sure you're going to speak to this, but a lot of traditional banking is designed, the risk models are designed around what we'll call old world type businesses. So bricks and mortar, heavy equipment, stuff like that they can actually secure against. Whereas the world is ever more services based and knowledge based. So there's a real mismatch between what banks are looking for, or at least think they're looking for, and what's available in the marketplace. And that's where the alternative lenders have come into the space. Can you speak to the profile of what kind of businesses you're attracting as borrowers at this point? Is there kind of any kind of homogeneity to that, or is there a very diverse set?
It's very amorphic. A lot of the times the customers don't even know what they're going for. Okay. They just know that they need funding, but they don't know what type of funding they need. All they know is what they want it for. And we ask those questions as well. What do you need the money for? When do you need it? Like what's important to you? Do you want a loan that you can get very quickly? Do you want a loan, do you want a line of credit where, it replenishes as you pay it back? What is it that you're looking for? Once we collect that information, we can narrow down exactly which loans that are available to the customer are best for him. And then we'll have our account managers contact the customer and say, hey, you have these types of loans at your disposal, and they'll get even deeper into it with him. For example, if a person, just needs money right now today to payroll, okay, that's very basic, very quick. It's not, you don't need some huge, crazy amount. You just need to make payroll for the next 2 weeks. So they can take a short-term loan. They can pay back over 3 months, and we'll provide that for them.
Excellent. So, you talked about the risk scoring. So you guys are doing all the underwriting yourself. So how robust are your risk models at this point? I've seen evidence
I wouldn't say that we're doing underwriting. Okay. Underwriting is a very general term. Every single company that we work with has their own credit model, has their own box. They underwrite. What we're doing is just kind of a screening.
But to do so, I would take it, you'd have to understand what their risk models look like, what their underwriting looks like, right?
Of course.
Basically directing opportunities based on what they find important. Now, are they communicating their underwriting models to you in advance, or is there some degree of trial and error to figure out exactly what they will take and won't take or are looking for?
It's a combination. It is definitely a combination. One thing that's very prominent about Become, and I've been at Become for the past 5 years, we're very, very, very analytical, okay? We will get into the most obscure of details and create a filter for it. I don't think any other marketplace or platform like ours has as many filters or creates as many filters or will customize filters the way we do for our lenders. Now, every lender's underwriting model, that's their business, okay? That's not something that, a lender will happily share. For them, that's their underwriting model. That is their success. This is how they're making money. They'll give us their minimum criteria. Over time, we will take that minimum criteria and figure out exactly what is their sweet spot with that minimum criteria. For example, a lender may come to me and say, set my minimum criteria to 600 FICO, 1 year in business, and no more than 3 NSFs, and so on and so on. But if I send him a lead that meets only those minimums, then that customer is never going to get approved because he only meets minimums. So I have to figure out a way with my team and with the lender to take that minimum criteria and tweak it in such a way so that it works in a combination of factors. So if the customer does have a 600 FICO score, well, then he cannot be 1 year in business. As I see from our history together, he needs to be 2 years in business in order to get funded. And that's just something basic. So we'll tailor that criteria to each lender.
This has got to be an ever evolving issue for you guys because, some of the data points I've seen garnered by some of the alternative lenders out there, everything from scraping the internet for whatever they can find about the company or the person, right down to understanding almost, social media behavior, depending on how far they want to go to the rabbit hole. I'm wondering just how extensive, how many data points are you guys taking in order to basically try to map over their risk models?
I can't count them anymore, okay? I can't, it used to be, I'd be like, oh, we're 10 data sources, and now it's like, I don't know, like 50 something. It's really vast. And also we won't collect the same amount of information on each customer. If a customer shows that he's looking to be qualified for very top tier lenders, then we'll collect even more information. Okay, we'll go and we'll get his tax returns, we'll scrape those. We'll get into the nitty gritty according to how much nitty gritty needs to happen. So yeah, in that sense, we're very agile.
Yeah, I mean, this is, like I said, an ever evolving issue. So you're getting you're kind of, in a lot of ways, I mean,
It's not an issue. It's a solution.
Excellent. So, and it's an ever evolving model. So, I mean, you may not be risk scoring them yourself. You're getting a pretty good understanding of which ones, are how they're going to score these things. So,
listen, we take it to the other end as well. If the customer comes to our platform and he doesn't qualify for anything, we're not just going to give him that screen of like, too bad, so sad, try again later. We're going to take him to our lending score dashboard and we're going to show him, this is you, okay? This is why you have no offers. And sometimes it's something so basic. He's 11 months in business. Hey, you're 11 months in business. Next month, you will have these 3 offers.
3 offers. Yeah. So, I mean, yeah, it's amazing because those little thresholds, you're adding in the softer touch almost, the things that, you're giving the advice, you're actually providing advice based on thresholds that are met. So I'm curious, is that just like a time-based factor, or are there things where you can come back to
everything? We'll show him in your bank data history, you had 4 NSFs. If you stay clean for the next 2 weeks, you'll have an average of 2, and then you'll qualify for 2 more offers. Your credit score is currently this. Go to Credit Karma, take out do some credit repair, and you'll be able to get these more offers, and so on and so on. Each one of those data sources that we're checking on that customer, for us, we see that as action items for the customer should he not qualify. Or sometimes it's just a matter of seeing who he matched with that day. He may have had 10 matches, but none of those matches are good for him. He doesn't want those. The interest rate is too high. So we'll tell him, listen, if it's not urgent, if you don't need the money yesterday, then just work on these 2 things and you'll be able to get a much better offer.
So take me through the full customer experience. I go on your site. Maybe I'm looking for one form of debt. I click on let's see, I'm just going to do it right now. Get funding offers. Boom. I'm choosing a loan amount and I go through it. So tell me through what the entire experience that the customer who goes to your website can expect start to finish.
So yeah, basically the second the customer sees our super awesome marketing strategies on Facebook or Instagram, they'll click in, and the first page that they'll land on is choose a loan amount. How much do you need to borrow? After that, they'll just, put in their time in business, what they think their monthly revenue is, what they think their credit score is. And then after that, they're asked to leave their details. Very basic, very quick. We just want to know where you're at. Okay. Once they leave their details, that's when the application really begins. And we always start off with urgency. Okay. What is your pain? Okay. Tell me exactly what you need. And we'll ask them how soon they need the funds, what they want to use the funds for. What is their main preference? Are they looking for a short-term loan? Are they looking for the lowest rate? What is it that they want? After that, we get more granular into their business. Okay, we'll ask how many employees, if they're B2B, B2C. We'll verify ownership. If they, select that they're under 50% owners, then the very next question is, okay, so who are the other owners? And then they'll have to verify those owners as well. They'll select their industry, they'll put in their business address. If that matches their home address that we later ask them to put, we'll ask them, okay, so are you home-based? And they'll click yes or no. After that, we'll pull information from the SOS in the state that they're in, and then we'll show that to the client. Hey, this is what it looks like to us that your business is on the SOS website. Can you confirm that? And they will, or they won't. And if they don't, then we'll give them a list. Which one is you? So we make it very easy for them to provide us that information. After that, we'll ask for their date of birth, their social, tax ID, and permission to do a soft credit check and pass the application on to the lenders who are going to be taking a look at their application, okay? Immediately after, we'll ask them to connect their bank account. We're using a company called Plaid. They actually recently got acquired by Visa, which is really cool. We started with Plaid before it was cool. And all of our lenders just didn't want to do it. And it took a lot of convincing on our end to get our lenders used to Plaid, use Plaid. Plaid's great, do Plaid. I feel like a secret agent for Plaid right now. But
you don't need any help. It's sold out for enough.
So yeah, we're very strong believers of Plaid. So after they link their bank account, we're doing that full assessment of their bank data 90 days back. And we'll use all of that information to fill out the rest of their application. At that point, they're already getting to the offers page, okay? Now, some lenders will come back to us with their pre-approval offers. Here's your pre-approval, continue the application, move forward, and we'll get you a full approval. Other lenders, they'll prefer to take some time, look over the application. They'll get back to us in 20, 30 minutes. That's where our account managers come in, just to let the customer know on the phone, email, whatever medium is most comfortable for the customer, that they have more offers.
So at the end of the day, they go like you said, one-stop shop. You go in, fill out one set of applications, set up one application. You aggregate all that data, tell them where to go. You then you collect your distribution fee on the back end. And do you do anything beyond the sales? Is there any kind of after lending support that happens? Or is it just the relationship is placing them and then you move on?
Our customers have such a strong relationship with our account managers. I don't know if you took some time to check out our reviews, but we have really, really amazing reviews. Like the relationship between our account managers and our customers, I haven't seen anywhere else. They're very, open with each other. Our account managers are very happy to help before the funding process, during the funding process, and even after. Sometimes we'll get a message from a customer a couple months later, like, hey, I'm having trouble, making my payment this month. Can you talk to the lender? And we'll do that. And we'll let the lender know, and we'll work something out.
Excellent. So, in a lot of ways, they're like, there's no perfect corollary for it, but they're like an independent mortgage broker, but working in continuous time on multiple sets of debt. So, fantastic.
It's more like just extremely good customer service.
Yeah. And you jumped ahead on me. One of my classic questions is, tell me about the reception you got from customers, and clearly that's very positive. So, tell me instead, though, about the reception you got from lenders when they were first approached with this concept. Was there any pushback? Were there wait and see people? What happened there?
One of the things that I like about working for Become, as opposed to other places that I've worked in, we're like a business model. And sometimes we win when they lose, or they win when we lose, or somebody has to lose. At Become, the philosophy is very much triple win. Everyone has to win. Customer wins, we win, and our lenders win. Our lenders win because we're giving them a customer that's not only very open to their offer, but is very likely to be approved for their offer. So a lot of the work on their end is already, it doesn't need to happen. Okay, we do most of the heavy lifting. So they're very happy with our model. Here and there we get pushback because the way that we have it set up is that we're tailoring processes. We're not trying to force our customers to all align to the same process, because every business is different. There's very small businesses where it's just one guy in a shop, and there are larger businesses where it's a firm of 20 people. Bigger businesses, 200 people. Each one of these entities has very, very different needs and different ways of working and different qualifications. So one of the things that we're getting across to our lenders is, depending on your product, your sweet spot, and your model, we're going to send you these types of customers, but you need to work with them in this way. And sometimes there is some pushback, but we're able to work past that and create a relationship where the lender truly feels like he's gaining from this partnership much more than he's putting in.
Good. So generally, you found a win-win-win scenario and essentially made it easier, more user-friendly, and provided a layer of service while aggregating all the content in one place. So you've really done a lot to kind of build out the offering, not just from the initial concept, but beyond that. So before we wrap up, there's 3 questions I ask everybody. First one is, you had one wish for something you can change in your industry or in your company. What would it be?
I wish you had gotten to me with that question before, so I could have thought about it more.
Better to surprise people.
What would I change in the industry? I think I would want there to be more transparency. At the end of the day, the Become company value is be helpful, be transparent, get your client through the hoops. If we had more transparency in this industry as to why customers are being declined and what they need to do in order to be approved, I think it would be a lot healthier for all the small and medium business owners.
Well, understanding how lenders see them would only basically help them better prepare for that and better actually market themselves to lenders. So yeah, I see the point of that.
And also from, evolution to evolve as a business. If you know where you're lacking, then you can work on that and become better than you were yesterday.
Yeah, absolutely. Absolutely. Second question for you. What has been the biggest challenge in getting the company to where it is today?
I would think market share. In Australia, we took over like in 7 months. Like literally it just took over. And here we're just a drop in, the vast ocean of think about it. There are more people in Texas than all of Australia. So
I live in Canada. Trust me, I'm all aware of size comparison.
coming into the U.S. market, yeah, it's very difficult to get a decent amount of market share. And working, with like Facebook and different marketing platforms here, it can get quite expensive once you go up into higher volumes of acquisition. And like I said, our lenders are very, very happy to work with us because the customers that we send are very highly qualified, very highly interested. For them, it's an easy customer. They would just like to see much more of those easy customers.
So last question is, what excites you the most about what it is you're working on, gets you out of bed every morning to keep doing what you're doing?
I think my main drive is just to make an impact. As long as I feel like I'm achieving something, as long as I can, finish my day every day and have some type of success, small or large, to be proud of, then I'm truly happy.
Well, I mean, you're helping finance lives of countless entrepreneurs and their employees. So I would go eager to say that you are having an impact, and hope you guys keep it up.
Yeah.
Excellent. That sounded more convincing there. Come on.
Listen, it's like the question that I ask myself every morning is not, overall, general, this is what I'm doing, this is my impact. It's what am I doing today in order to make that impact? That's what gets me out of the morning. Like, what am I doing today? Like, my main, philosophy in life is wake up every day and grab it by the horns and, make it yours. So, yeah, I'm coming with a lot of enthusiasm and energy to this job.
Fantastic. Well, thank you for taking the time, and thank you for sharing your story. And I'm sure you're going to get many visits after this. So hopefully this helps you a little bit with market share.
Thank you. Thank you.
Take care.
All right. Have a good one.
So that was my interview with Shuli Mantsur. I hope you enjoyed that. And if you're a business owner who's ever been through the pain of applying for any form of credit with a bank, I think you'll find his model very appealing. So if you are in a position where you need that and you are in the US or Australia, I highly suggest that you take the time to check them out. As always, if you enjoyed this podcast, please leave a review on iTunes, Stitcher, or wherever it is you get your podcasts. Until next time, take care. I'm Jason Pereira.
This podcast was brought to you by Woodgate Financial, an award-winning financial planning firm catering to high net worth individuals and their families. To learn more, go to woodgate.com. You can subscribe to this podcast on iTunes, Stitcher, and Google Play, or find more episodes at jasonpereira.ca.